Featured guest, Joe Saluzzi, the co-head of equity trading at Themis Trading. Joe, I'm going to start with you. I saw you nodding when Mike was talking about incentives.
Mike's great. I mean, those are the issues that were really there before, and they're still there. I mean, that's the greed, fear atmosphere that we always talk about. You're greedy until something happens, and then you're too fearful. And I fear what's happening right now in the stock market is the same thing. It's that greed approach. Everybody's bullish now, right? They're all going crazy, and the bullish, the sentiment numbers are up. But soon, that fear was there just 6 months ago.
Shouldn't we be a little bit more bullish than we were 6 months ago? I mean, there's a lot more visibility. There's a lot less uncertainty out there.
Friday's stock market, to me, was the biggest tell. When you saw an unemployment number come out like that, that tells you what a joke, what an absolute joke the stock market is and how it's a lagging indicator, not a real indicator of what's going on. How do you get a number that tells you, you're so backwards in it? And why does the thing keep going?
I don't know.
But, it really is troubling when you see something like that. Minus 85,000, but we're supposed to be growing here.
Well, at least it looks like we're firing less. I mean, we haven't started adding jobs, but if you look at the weekly initial jobless claims number, it's come down substantially from the peak.
Like I think I said this once before, when you're in the basement, you can't stay in the basement. You have to walk up the stairs to get out. We're not walking up the stairs. We just stopped going down the stairs. But that doesn't help anybody.
But I think the key factor is going to be really the weight of earnings coming out this quarter. Remember, for the past 3 quarters, earnings expectations have far exceeded analyst estimates. So, have those estimates caught up, and what's going to be the picture of corporate profits going forward is going to be the key driver over the next 3 weeks.
I mean, isn't that going to be really telling, Joe?
Absolutely. I think he's spot on. I mean, the earnings now have gotten to the point where no longer can you just be, good enough or close to it. You're going to have to blow them away this quarter. Now, we're looking at a $77 estimate for
You're
the
making
year.
It easy, by the way, with $77. Carol and I ate breakfast this morning at Deutsche Bank. They're looking for 82.
82? Oh, let's make it 90. Why not? It's crazy, right? So I'll be conservative.
If you want them to blow away, though,
$77. It's a 36% increase from last year. Okay, you're looking at a 15 forward PE right now on that earnings. Yet you're in an economy which is closer to the 80s, and I talked about this once before, which deserves really a 10 PE. If the economy is so fragile, like the Fed keeps telling us, which is why they won't raise rates, why do you give it a 15 PE? It doesn't make any sense, in my opinion.
I wonder if we were talking about this as well this morning, and what we were saying is a 10 PE was something we had back in March, right? And if you reduce the level of uncertainty, if you reduce the concerns and the headwinds and the fears as you go forward, shouldn't that justify a higher PEO as you go forward?
Well, March, what was the earnings estimates back in March? I'm sure they were lower than they are now. They've been raising them for so much, right? What were they at? $60 then?
About $65.
But
right?
that's where the fear, that's what I was talking about before. That was that excessive fear that drove us. Stock market, here's the bottom line. The stock market overreacts in both directions. What is it going to take to get this market down? Did you see today, California was downgraded. In my opinion, if California was a public corporation, they would be the next Lehman Brothers. That's how bad this thing is. And the government, it's the same story. They said, we're not going to bail you out, California. Where are they going to come up with the $9 billion that they owe?
I'm glad.
Let's go back to Joe Saluzzi. I'm seeing him making some faces over here. What?
The next Lehman Brothers, really? Do you see a state going bankrupt?
Well, we know too big to fail exists, so obviously California is too big to fail.
Come on, the government's not going to let California fail.
Well, that's what we thought about Lehman Brothers, right? We all thought Lehman Brothers would survive that weekend. No one in their right mind thought that, we'd come in, right? So, look, it's who knows what they'll do? They don't have the money. We can't keep printing. And
there's a lot of votes in California.
Well, of course, we can't keep printing the money. How many times do we got to go through between the economy and so on? Yesterday, the Fed making money was the biggest joke. Mark Faber, you had him on your show yesterday, and he said how they value their assets, however, is a whole other story. If the Fed is currently 43 times levered up, an investment bank was 30 times levered up at the height of the bubble. 43 times, which it was in the journal
Lehman
today.
Was 39, so right about even with the Fed, right?
A 2.8% drop in the assets of what the Fed holds would wipe out their entire capital. So again, if they were a public corporation, they would be the next Lehman Brothers. But come on, let's be real here. Why I always come in here is the divorce between the stock market and the economy. They don't make any sense. They're on two different roads right now. What is driving this beast of a stock market? I really can't tell you anymore. I've given up fighting it. I told you that.
Joe, I got to tell you, I got viewers emailing in saying, go Joe, and then another one saying this guy is smart, but to compare California with Lehman, I mean, they aren't the same. How can you put them in the same category?
Well, I don't know. I'm not inside the books. I didn't see Lehman's books. I didn't see California. But I'm saying the same theory applies, that we were going to save Lehman, right? And now the government turned around and said, we're not going to help you, California. They said that already. So how could you not compare the two? They're in the same situation. They both owe a lot of money, and they both have a problem. Okay, but here's the, if I can go back to what Matt said earlier.
Right.
What's going on now is, hey, it's a trader's market. You're going to make money. Everyone's trying to pick spots. But that's that short-termism, I think, that David Walker was kind of referring to earlier in your earlier interview. That's the problem. There was even a commentator on another network, a well-known guy, and he was talking about how loss of jobs is good because that's what makes companies money. So you as an investor should be happy that they're firing everybody. Come on, let's be real. That is short-term thinking. That is not, people who get fired aren't spending money, and that's what you were talking about before, Matt. The consumer, the credit numbers were down $17.5 billion.
But we want to see that. Everybody was over-leveraged. I understand what you're saying. I mean, everybody was over-leveraged.
I think it's a great idea. I think you should pay down your debt and do as, you know, you shouldn't walk away from your house either, like these guys are doing with these strategic defaults on the mortgages.
Right.
Okay, that's something different. But I agree, yeah, you should pay down your debt. However, for an economy to grow at the rates that they're looking for to sustain a recovery, you need people spending.
You don't think things are better? Come on.
We do this every time.
I know, but come on, go back a year. You know how terrible and miserable it was. I mean, things are somewhat better.
Yeah, attitudes and people thinking and looking at the stock indices and everyone's feeling happy. But when you go out and you talk to the real people out there that Wall Street analysts don't seem to want to talk about, who are unemployed, who have been unemployed for 27 weeks, 40% of the unemployed now, 27 weeks or more. Come on, where are they? How are they living? How are they paying the bills? And that's why the foreclosures keep going.
Up, though?
They were up 1% when you take out the one extra day. Better from a disaster of last year. Nowhere near the numbers of 07. People forget 08 was a total annihilation.
You can't. Come on, Joe. Retail sales are up. We're not losing 500,000 jobs a month. Home prices are actually rising, albeit to the level they're rising. GM says they're going to make a profit this year. I mean, even if you say it's all because of the stimulus, at least some of these numbers are ticking up.
Can I get some of that Kool-Aid you've been drinking? Is that the bullish Kool-Aid? I need a little of that. Let's look at the numbers. Okay, I think it was Robert Schiller the other day. He was on, and he's the Mr. Animal Spirit. He didn't even sound very bullish on these numbers. The Case-Shiller index is up 5% off its lows. 5%? And that's a recovery? You've got a shadow inventory of millions of homes out there just waiting to flood the market as soon as they get a chance.
Right.
We got a mess on our hands.
Yeah, but we want to have people come back, be it into the housing market, say, okay, the market's better, now I can sell my house. Sure, the numbers are going to look worse as a result of that. Same thing with the labor picture.
Yeah.
As people who said gave up looking for a job, they're going to come back. It's going to increase the unemployment rate. We know that. But you want to see some of this, don't you?
I'd love to see. Wouldn't you love to see some hiring? How'd you like that beige book today, which was kind of one of those Goldilocks, well, kind of a little of this, a little of that, but no one's hiring.
Hang on, let me get you on the record saying you don't expect hiring in the first quarter of 2010 because everybody who comes on this show says we're going to add jobs now.
Get the other guy who said the weather was the cause of the Bring him back on. I'm not an economist. I don't know those numbers, but it's not great.
I got to throw a bone to Joe here quickly because the SEC is talking about banning unsupervised access in stock markets. If you're going to be optimistic anywhere, it's good to be, as a Goldman Sachs shareholder, you could be optimistic, right, that they'll actually make money in prop trading because they seem to have really good days every day.
Oh, that's amazing. You can make money 63 out of 64 days in a quarter. I don't know how they do it. They have a better crystal ball than us. But, yeah, that's great for them. I personally don't like the investment banks. There's too much risk there. I have one pick for you today, but I never come in with a stock pick. I got a stock pick, but it's not really a stock.
Let's hear it. You got to make
it. And I agree with Matt just there. I think the yields on the bonds, I agree with Matt 100%. TBF, Tomboy Frank, it's a short of the Treasury index. So if you think yields are going up, and it's not one of these ultra shorts, I hate the doubles, I hate the triples, they don't work right. It's a single short. I think yields are going up to 4.5 as long as the printing presses keep coming.
All right, so what would make you happy and finally say things are somewhat better?
Stop the government printing presses. Let the economy grow organically. Let's see some real growth, not stimulus, not constant programs. You can bet you're getting another program coming out soon. It's just not working yet.
Another Cash for Clunkers program. Wilbur Ross called for one on Bloomberg this morning.
He's a smart guy, made a lot of money.
Who was this?
Wilbur Ross.
Of course, I'm not going to argue with Wilbur Ross. I'm not that crazy.
Plus, you'd want a Cash for Clunkers program as well if you owned auto parts makers.
No, that's the whole thing. Everyone's talking about their own investments. And Matt's right. As a trader, you have to take what the market's giving you. But I'm talking more longer term stuff here, and let's cut the short-termism and saying people, firing people is good. That's ridiculous.
All right, we can
all agree on that.
Yes, we can. All right, Joe Saluzzi, as always, we love having you here, co-head of equity trading over at Themis Trading. Matt.